call on $5,000 gold. This is from Standard Chartered, a bank. They said they see precious metals heading as high as $5,000 an ounce. They see rising demand and flat supply as the reason for this price increase. Notably, demand from China and India is going to be on the rise, and that's going to push prices higher. You can read that story in our newsletter. They think by 2018 to 2020, we could see $5,000 gold. Also, James Turk said gold and silver have bottomed. The summer explosion is ahead. This summer, you could see a move higher in gold and silver that literally shakes the world, more than it has been shaken when Lehman Brothers collapsed. A lot of people asked if we would get another Lehman-style collapse. Will gold and silver fall as they did in 2008? He says, I don't think they will. The reason back in 2008, the primary driver after Lehman collapsed was a rush for investors, hedge funds, and other obviously individuals, everyone looking for liquidity. And he says most people learned a very valuable lesson from that event. Consequently, this time around, you're not going to see a rush for liquidity. You're going to see a rush for safety. The safest haven of them all is physical gold and physical silver. And that's what we saw in 2008, people just throwing out the good with the bad just to get liquid. One of the other stories that caught our attention is in the newsletter this week. Eric Sprott says, we're headed over a cliff. Be wary of paper assets. When asked about Jim Sinclair's comment regarding $12,500 gold, Sprott said, nothing surprises me as to where gold can go. I mean, you just simply look at the printing of money and the way that we've attempted to deal with things and the stresses in the banking system. And my ultimate end for gold is when people realize they're probably better off not having their money in the bank. And an interesting point he brought up, Harold, when asked about inflation, he said corn's up 118%, wheat's up 71%, cotton up 83%, sugar up 61%, coffee 96%. He says, well, I chuckle when people at the Fed and the Treasury suggest there's no signs of inflation. There are nothing but signs of inflation, notwithstanding the Fed suggesting CPI is up 1 or 2%. And that's something that we've said for quite some time, that you really can't believe some of the numbers that are being put out by government. If you go shopping and you get your own groceries, all you have to do is go out and you're going to see that on a daily basis. But Harold, some very good prognostications on the gold side of things. We'll talk about silver here momentarily, but people very, very bullish due to what's happening as a result of the sovereign debt crisis getting even worse this summer.
You bet. And how can you not be bullish on gold? Because, again, all you have to do is go back in history and realize why gold does what it does. I mean, gold is a reflection of what the world economy is doing, and especially in the United States. And looking back in, for example, in 1979 and 80, you know, prior to that, the price of gold was down to $35. So when there's no problems in the world economy, gold is dormant. And even back in 2000, when we first started doing the radio show, the price of gold was sitting at $250. It was dormant. It wasn't even moving, and nobody even cared about gold because the American stock market was up and the U.S. dollar was very strong and the economy was good. But as soon as things started to change, look what happened to gold. Gold quietly went from $250 to $300, and people at that point said, you know, it's not going to stay above $300. Then the market went to $4, and then to $5, and then to $6, and then to $1,000 and to $1,200 and $1,500 that it's at right now. And basically all the way along, people were saying that there's no way in the world that gold's going to, you know, continue to move, and look where gold is sitting today, because it tells you what the markets are doing, and that's what gold has always done. And I've traded gold for almost 30 years now. So again, I've been through these moves in the markets before, and I know what to look for. And again, that's why we saw inflation coming, you know, quite a while ago. So inflation is a major reason why gold is going to start to hit those levels of $4,000 to $5,000, and silver is going to hit the levels of probably anywhere from $150 to $250. The other thing is, do you remember when silver dropped from $50 down to $32.70? They were saying it was primarily because that the COMEX exchange raised the margin requirements 3 or 4 times in 1 week. And I had said at that point that makes absolutely no sense, because the major participants in the market are these major hedge funds, and they don't care whether a contract costs $10,000 or $15,000. They just buy it. Basically, a report came out the other day, and it's in the newsletter, that says that the warehouse stocks for silver in New York are below 100 million, actually at one of the lowest levels that it's ever been. So basically, that confirmed in my own mind that what we were saying was true, that was the real reason why they dropped the price of silver was primarily because they couldn't deliver against the outstanding futures contracts. And to me, I think that's the most bullish news, the fact that there's not enough silver sitting in the warehouses, and that's the reason that they sold it off. If that tells you that there's a shortage of silver going into one of the most amazing times, which will be the inflationary markets, and the investors will be buying physical silver like crazy, again, there's going to be a shortage of it, and that's why I believe that the price of silver is going to $250.
The telephone number to invest in precious metals, 1-866-623-2002. You can also go to wwpmc.com, wwpmc.com. Telephone number 1-866-623-2002. We do have that story in our newsletter. For the first time, total COMEX silver drops below 100 million ounces. Physical deliverable silver under 28 million ounces. And according to Ted Butler, he really believes that holds extremely bullish implications for the price of silver. James Turk said when viewing and you're looking ahead here at the forward contracts for silver, December 2015 commitments to silver and delivery, it remains in backwardization. And he says, I want people to know globally that physical silver, the market is extraordinarily tight. Rick Rule came out this week, and he says, when asked about the possibility of silver trading like internet stocks to the upside in the future, Rule had this to say, I think that's the case. I'm not a student of markets. I think Eric Sprott in our organization is the best at that, but I certainly remember the silver market going absolutely hyperbolic in the 70s. And when asked about the current physical tightness in the silver market, he basically said, makes this bull market different from that of the 70s. My gut tells me that's true. And the other thing is that in some senses, some of the increase in silver the last time in the 70s was due to an attempt by a very small cabal of investors led by the Hunt brothers to drive the silver price higher. In this particular case, what we are seeing this time is a cabal of 3 or 4 million physical investors. The demand is much broader based and much stronger. Great article as well this week. Jeff Clark coming out and asking the question, are we running out of silver? You can see that in our newsletter. Also, tidal wave of gold demand coming from gold and silver coming from China and India as their economies expand. And silver in China could turn out to be the new gold. China has turned from net exporter of silver to a big net importer, with both industrial and investment demand soaring. The Middle East demand also appears to be picking up very, very strong as well. You can read all this information and more in our newsletter. If you'd like to learn about investing in precious metals, the telephone number 1-866-623-2002, the website wwpmc.com, wwpmc.com, 1-866-623-2002. Going to come back and talk about diamonds. It was a great week for diamonds again. There was an auction in New York City. We'll talk about it as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show at 9:14 Mountain Time, 11:14 Eastern Time. Radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a show, you can catch us on Harold's website, HESradio.com. The telephone number to invest in precious metals, 1-866-623-2002. The website, wwpmc.com. On the diamond side of things, Harold's website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our featured diamond this week, only one diamond in 10 million is over 2 carats. And this beautiful, gorgeous diamond is 2.79 carats. The stunning 2.79 carat radiant cut, fancy yellow, internally flawless diamond is extremely rare, beautifully cut, and is very large in size. Larger yellow diamonds are extremely popular, but very few exist. And Harold obviously highly recommends this as a great investment idea. You can talk to Harold about the featured diamond. Go to the website rarecoloreddiamonds.com and see it yourself. Christie's had a New York important jewel sale on the 14th. And there were a couple of lots. There was about approximately 7 colored diamond lots, and they almost all went for substantially higher than originally anticipated. Lot 23, a colored diamond ring set with a square emerald-cut fancy, and this is a light yellow diamond. It weighed 19.22 carats, and the estimate on it, $300,000. The price went for $458,500 on that, $458,000. Also, Lot 66, a colored diamond and ruby ring by Bulgari, and absolutely stunning fancy yellow diamond there, approximately 3.48 carats, and the estimate on it was 15 to 20, went for $43,750. And there was another diamond, a pair of colored diamond earrings, ear pendants, and they were fancy yellow diamonds, approximately 17 carats each. And the estimate on that, $600, it went for $722,500. So, Harold, just very exciting auction results. Not a lot of colored diamonds were sold at that auction, as we've seen a lot of them go recently at other auctions, but the results that did come out were stunning, to say the least.
You bet. I'm very, very pleased about that because, again, it just confirms that what we've been saying for the last several years is happening right now. Because as well as gold and silver does during times of high inflation, so does diamonds. In fact, in 79 and 80, when gold went to 850, silver went to 50, interest rates went to 20%, colored and white diamonds went up 500% in 2 years. Can you imagine that? You bought a diamond for $20,000, and 2 years later, it was worth $100,000. The fact is that white diamonds are on the rise now, and that's not something that I necessarily deal in, but again, I do watch them as a barometer of what's going on in the diamond market, because there's an overabundance of white diamonds, there's no doubt about it. There's very few color diamonds available, so the fact is that when white diamonds are going up, it's an indication that we're going to head into another inflationary period like we saw back in 79 and 80, and this is something that's extremely important. If you one day would like to retire, you need to put money into safer investments. And putting your money into retirement savings plans and losing that money in mutual funds and stocks is not the answer. The fact is that there are alternative investments that are much safer and still get the job done. Most of my clients that own diamonds own them for retirement, and you put them away for the next 10 years. And again, with this type of market situation, with so few diamonds available and inflation on the rise and coming, to be able to put away a $20,000 diamond and 5 years later it be worth $100,000, I doubt that you're going to see those type of returns in stocks. And again, there's no risk in owning a diamond. There's other very powerful reasons for owning diamonds also. They're portable private wealth. Nobody knows that you own them. Can be sold in other currencies. Again, just a myriad of different reasons, but it's the safest asset. And again, colored diamonds are becoming very, very difficult to get. I had to look for a diamond for a client this week, and they wanted an 8 to 9 carat D-flawless white diamond. That diamond was over $1 million. The fact is that when the price of white diamonds start to go up like they're doing, it increases the entire diamond market. But the diamonds that really take off are the high-end colored diamonds, and that was evident by what Randy just read to us, which were the results of the auction that happened this week. And almost every single diamond sold for way more than what the experts said that they were going to sell for, and that's just a sign of the times. This is one of the strongest assets you could own, one of the most important assets you could own, and I recommend very highly 2 different types of diamonds. One are the yellow flawless diamonds. This week we're featuring, as Randy outlined to you, a 2.79 carat radiant cut, which is a square cut diamond, and this diamond is fancy yellow, which is a magnificent color, and it's internally flawless, which is what you want to own. You want to own the very best that money can buy. You do not want to own a flawed yellow diamond. You want to own a flawless yellow diamond. They go up more than any other diamond. A diamond like this could literally skyrocket in price, and you put a diamond like that aside. A diamond like this sells wholesale in the range of about $40,000. That diamond in 10 years from now could be worth 4 or 5 times that amount. And these diamonds are becoming more and more difficult to get because there's so few of them available. There's not been a new mine open in the last 15 years that produces any quantity of colored diamonds. In fact, many mines have shut down. And that's what's going on at this point. These major mines that have been in operation for decades are now